Germany, winter of 1923. You walk into a bakery, the price for one loaf, 200 billion marks. 5 years earlier, the money sitting in your bank account could have bought you a mansion. Now it can't even buy breakfast. In half a decade, an entire nation watched their currency disintegrate into meaningless paper. Yet through that chaos, certain individuals didn't just survive. They emerged stronger, not because they saw the future, because they understood principles that transcend time, geography, and circumstance. Fast forward to Argentina, December 2001. You try to withdraw money from your bank, the doors are locked, your dollars, the savings you carefully protected, are seized by decree, converted to pesos at whatever rate the government decides. 2/3 of everything you owned vanishes before sunrise. But here's what matters. Some people walked through that nightmare unscathed. They followed the exact same blueprint that worked in Germany, the same one that worked when Rome crumbled, the same one that will work anywhere, anytime. Today in America, we're staring at $36 trillion in national debt. The dollar has surrendered 98% of what it could buy a century ago. In just 2 years, the Federal Reserve conjured $5 trillion into existence. Every warning sign that appeared before historical collapses is flashing red right now. When the system breaks, and it will break, whether that's 5 years or 15 years from now, the same ancient principles will separate those who make it from those who lose everything they have. What I'm about to share isn't theory. These are 5 financial principles proven across millennia. They've been tested in every conceivable crisis. I'll show you why they work when modern strategies crumble. I'll give you the historical proof for each one, and I'll explain how to implement them right now while you still have time. This isn't about becoming wealthy. It's about not becoming destitute. Because in every collapse throughout history, the majority loses everything, not because they lacked intelligence, because they trusted strategies designed for calm seas, strategies that shatter the moment the storm hits. Before we examine these 5 principles, understand why principles matter infinitely more than tactics. A tactic is specific. Sell this stock, buy that metal. Maybe it works, maybe it doesn't. Success depends on timing, on the precise nature of the crisis, on variables you cannot control. A principle is universal truth. It functions regardless of context. These principles worked when gold was the only currency humanity knew. They worked when paper money was invented. They'll work in whatever system comes next. Whether we face runaway inflation, brutal deflation, or complete monetary reset, the principles remain constant. Most financial guidance is purely tactical. Allocate 60% here, 40% there. Buy this index. Such advice assumes continuity. It assumes banks stay solvent. Courts enforce contracts. Property rights mean something. When a system collapses, every one of those assumptions shatters. The tactics fail spectacularly, but principles, they endure. First principle, physical assets endure. Paper disintegrates. When currencies implode, when governments renege on promises, when financial systems seize up, tangible assets retain value because they exist in reality. Paper assets are merely claims on someone else's obligation. In collapse, those claims become unenforceable. They evaporate. Germany between 1918 and 1923 demonstrates this perfectly. Enter that period with 100,000 marks in your account. You're wealthy, comfortable, secure. Exit 5 years later. That same sum can't purchase a single loaf of bread. Currency inflated into absurdity. Paper wealth simply vaporized. But people who owned hard assets, land, structures, factories, they survived. A farm in 1918 remained a farm in 1923. It produced the same crops. Its real value never changed. The price in marks went from 100,000 to 100 trillion. The farm itself? Identical. Zimbabwe in the 2000s. Hyperinflation reached nearly 80 billion% monthly by 2008. Hold your savings in Zimbabwean dollars? Worthless. But own farmland, livestock, equipment? Your wealth survived. That land kept producing food regardless of what happened to paper currency. Argentina, again, early 2000s. Government freezes every bank account, then forces conversion of dollar deposits to pesos at an artificial exchange rate. The peso then collapses to a quarter of that value. Same principle across 3 continents, 3 different eras. Physical assets survive, paper burns. In America today, most wealth exists as paper. Stocks, bonds, retirement funds, bank balances. These are all claims. A stock claims future corporate earnings. A bond claims eventual repayment. A bank deposit claims the bank's promise. In stability, these claims function perfectly. In collapse, the system stops processing claims. Courts are overwhelmed. Banks fail. Governments default. Markets freeze. Your paper claims become worthless. But physical assets remain. Real estate is still real estate. Gold is still gold. A farm still grows food. The asset possesses inherent value independent of any financial system. When everything breaks, paper burns, hard assets survive. Second principle, own assets that produce, not assets that speculate. This separates things that generate actual value from things that only matter if someone pays more tomorrow. Productive assets create income, food, or utility, independent of opinion or market sentiment. Speculative assets only have value if you can find a buyer. During the Great Depression, 1929 to 1933, stock markets collapsed 89%. Own stocks for speculation? You lost nearly everything. But own productive assets directly, a working farm, rental properties, an operating business? You still received the production. A farm produced food you could eat or trade. Rental property provided shelter people desperately needed. Productive assets generate value independent of what any market says. A farm produces the same harvest, whether markets are soaring or cratering. Speculative assets only matter if you can sell them. In collapse, buyers disappear. Venezuela through the 2010s. Their stock market surged 100,000% in local currency. Sounds incredible, until you realize the bolivar lost 99.9% of its value. But people who owned productive assets, farms, bakeries, transportation, they thrived relatively. A bakery produced bread. People needed bread desperately. The bakery created genuine value. Compare that to Venezuelan government bonds. They only mattered if the government honored them. The government defaulted. Bonds went to zero. In America now, most assets are speculative. The market is valuable because people believe it will rise. Cryptocurrencies produced nothing. They're valuable because people believe others will pay more later. Most real estate is speculative, purchased for appreciation or flipping. Productive assets are fundamentally different. A farm growing crops is productive. A rental property you own outright is productive. A business making goods people need is productive. When collapse arrives, own things that produce value. The farm feeds you. Speculation doesn't. Third principle. Debt destroys you during collapse, even good debt. In stable times, debt is leverage. Borrow for a house, it appreciates, you profit. In collapse, all debt becomes toxic. Your income drops or disappears completely. Your debt doesn't. The bank still demands payment. Can't pay? They seize the asset. The Great Depression proves this brutally. Farmers borrowed heavily during the 1920s boom. Land prices were rising. Leverage made sense. Then 1929 hit. Crop prices collapsed. Farm income fell 50 to 70%, but bank debt didn't decrease a penny. Between 1930 and 1935, over 750,000 farms were foreclosed. Families who'd owned land for generations lost everything because of debt. Now compare farmers who owned land completely debt-free. They struggled. Prices were terrible, but they survived. Without debt payments, they lived on whatever the farm produced. Debt-free farmers survived. Indebted farmers lost everything. Argentina, 2001. Again, middle-class families held mortgages denominated in dollars. When the peso collapsed, peso income dropped 66%. The mortgage stayed identical in dollars. People's income fell by 2/3. Their debt payment didn't budge. They couldn't pay. Banks foreclosed. People lost homes they'd been paying on for a decade or more. Meanwhile, people who owned homes outright kept their homes. Same crisis, same income destruction. But no debt meant no foreclosure. Greece, through the 2010s, incomes fell 30 to 40%, pensions were slashed 50%. But mortgage holders still owed the same amount. Default rates exploded. Debt destroyed them. In America today, households carry $17 trillion in debt, $12 trillion in mortgages, $1.6 trillion in auto loans, $1.6 trillion in student loans, $1 trillion on credit cards. When crisis hits, that debt will destroy millions of families. The counterargument claims inflation helps debtors. Owe $300,000 and inflation runs 20%. Your debt decreases in real terms. True if your income keeps pace. But in actual collapses, it doesn't. The only safe position is zero debt. Own assets completely free and clear. If you own a house with a mortgage, you don't own a house. You own a leveraged bet that prices stay high and your income stays steady. Own a house free and clear, you own a house. Period. No bank can take it. Debt works during expansion. Debt is suicide during collapse. Fourth principle. Skills are the only truly portable wealth. Every other form of wealth can be confiscated, land can be seized, gold can be taken, money can be inflated, businesses can be nationalized, but skills stay with you. They exist in your mind. They cannot be taxed, confiscated, or inflated away. The Holocaust demonstrates this tragically. Jewish families owned property, businesses, substantial wealth, all confiscated by the Nazis. But Jews who survived often did so because of skills. Doctors, engineers, craftsmen, tailors. People with skills could work. They could trade labor for food. They could rebuild in new countries. The wealthy merchant who owned property but possessed no skills starved. The skilled craftsman who owned nothing but knew how to build survived and rebuilt. Soviet Union, 1917 to 1922. The Bolsheviks seized all private property. Aristocrats who owned vast estates lost everything overnight. But engineers, doctors, skilled workers maintained value. The Soviet state needed them. Their skills gave them leverage even under communism. The aristocrat who owned 10,000 acres but couldn't farm starved. The blacksmith who owned nothing but could make tools survived. Vietnam 1975. When Saigon fell, millions fled. They couldn't take property. They couldn't take businesses. Vietnamese refugees who rebuilt most successfully in America were those with skills. Doctors, engineers, accountants, mechanics. They arrived with nothing but expertise. Within one generation, they built successful lives. In America today, most wealth sits in financial assets and real estate. These are not portable. Need to leave? You can't take your house. You might not be able to take money if capital controls are imposed. The skills in your head are the only guaranteed portable wealth. But most Americans possess no practical skills. Can you grow food, fix machinery, build shelter, provide medical care? These are valuable skills in every economy, stable or collapsed. Develop skills that produce value independent of complex systems. Skills are the foundation of rebuildable wealth. Everything else can be taken from you. Fifth principle. Local trust networks outlast all institutions. When systems collapse, institutions fail. Banks close. Governments lose authority. Police cannot enforce laws. The entire institutional framework breaks down, but local networks of trusted relationships survive. The Soviet Union collapsed between 1991 and 1998. The Soviet government dissolved. Currency became worthless. Pensions stopped. Supply chains broke. Grocery stores stood empty. Russians survived through local networks. Families shared resources. Neighbors traded. Communities organized security and pooled resources. The people who survived best weren't the wealthiest. They were people embedded in strong local networks. The isolated individual with money in the bank starved. The connected person with relationships thrived. Argentina, 2001 once more. When banks closed, neighborhood assemblies formed spontaneously. People organized locally to barter, share resources, provide security. These informal networks became more important than government. People embedded in these networks could trade skills for food, labor for goods. Lebanon from 2019 to present. The pound lost 90% of its value. Banks closed. Government became dysfunctional. But Lebanon hasn't descended into complete chaos. Why? Because Lebanon is organized around family and religious community networks. These networks provide what government doesn't. Before modern institutions existed, all economic activity happened through trust networks. You traded with people you knew. You borrowed from people who knew you'd repay. Modern institutions scaled beyond local trust. But when they fail, we revert to trust networks. In America today, most people are institutionally embedded but locally isolated. You have a bank account but don't know your neighbors. You rely on supermarkets for food but don't know local farmers. You rely on police but don't know your neighborhood. This is catastrophically fragile. When institutions fail, you have no fallback. Build local networks now. Know your neighbors. Develop reciprocal relationships. Embed yourself in a community. As institutional trust fails, local trust becomes exponentially more valuable. The person with strong local networks will survive. The isolated individual will struggle desperately. These are the 5 principles. Physical assets endure. Paper disintegrates. Own productive assets, not speculative ones. Debt destroys during collapse. Skills are portable wealth. Local networks outlast institutions. Notice what's absent from this list. Which specific stocks to buy. Which cryptocurrency to hold. Whether gold or silver is superior. These are tactics. The principles work regardless. They worked when Rome fell. They worked in Weimar Germany. They'll work in America. And the beauty of principles is they don't require perfect timing. You don't need to know exactly when collapse comes. You position according to principles that survive collapse. Own hard assets instead of paper. Collapse could arrive in 2030 or 2040. Doesn't matter. Hard assets preserve wealth in both stable times and crisis. Own productive assets. If the system stays stable, productive assets generate income. If it collapses, you have production. Eliminate debt. In stable times, you have resilience. In collapse, you survive while debtors lose everything. Develop skills. In stable times, skills increase income. In collapse, skills become your only portable wealth. Build local networks. In stable times, you have community. In collapse, you have survival infrastructure. These principles improve your life immediately and protect you later. The mistake most people make is waiting for certainty. They want to know exactly when collapse comes. But collapses don't announce themselves. By the time it's obvious, it's too late. The genius of following principles is they don't require prediction. You position according to what survives collapse. You're protected regardless of timing. These 5 principles are ancient. They've survived 3,000 years because they're true in every economic system. Roman Empire, medieval Europe, Industrial Revolution, modern America. The principles don't change because human nature doesn't change and mathematics don't change. When debt exceeds the ability to pay, collapse follows. When currency is debased, paper wealth evaporates. When institutions fail, local networks matter. These aren't predictions. They're patterns that have repeated hundreds of times. The American collapse will follow identical patterns. The tactics that work this time will be specific to our situation, but the principles remain constant. Physical assets endure. Productive assets generate value. Debt destroys. Skills are portable. Local networks outlast institutions. Position, according to these principles now. You survive what's coming, ignore them, and follow tactics. You're gambling that you can time the collapse perfectly. That's a bet most people lose. If this showed you that principles matter infinitely more than tactics, that the same 5 principles have survived every collapse in history, and that you can position right now without needing to predict exact timing, stay with me. Because what comes next will show you the specific tactics that align with these principles in 2025 America. Which hard assets make sense in a digital economy? Which productive assets generate value in modern markets? How to eliminate debt strategically? Which skills are most valuable? How to build local networks in an isolated society? The principles tell you what to do. The tactics tell you how. These 5 principles worked in Rome. They worked in Weimar. They worked in Argentina. They worked in every collapse. They'll work in America. The only question is whether you'll follow them before the window closes, or whether you'll wish you had after it's too late.